Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The fluctuations in the exchange rate between the US dollar and the Iraqi dinar, as recorded in Baghdad and ERBIL. The data reflects specific changes in the value of the US dollar when compared to the Iraqi dinar, based on surveys conducted by the Shafaq news agency. It highlights both the selling and buying rates in major locations, such as Baghdad's central stock exchanges at Al-Khafa and Al-Harithiyya, as well as in exchange stores in Baghdad and ERBIL. Below is a more detailed explanation and contextualization of the information presented, elaborating on the nuances of currency exchange, regional economic implications, and the broader economic context. The exchange rate between two currencies, such as the US dollar and the Iraqi dinar, is a reflection of the relative strength of each currency in international markets and local exchanges. The rate is influenced by a myriad of factors, including economic policies, supply and demand for foreign currencies, inflation, trade balances, political stability, and broader international economic conditions. In this particular instance, the exchange rate in Baghdad, as recorded by the agency, shows a small but notable increase in the value of the US dollar against the Iraqi dinar. The official stock exchanges in Baghdad, specifically at Al-Khafa and Al-Harithiyya, are key centers where exchange rates are tracked closely. On the day in question, the dollar was valued at 150,100 dinars for every $100, an increase from the previous rate of 149,900 dinars for every $100. This shift, while seemingly small on the surface, represents a wider movement within the foreign exchange market that could be indicative of various underlying economic trends or conditions. To provide more insight into these fluctuations, it is important to understand how the exchange rate system works in Iraq and similar markets. Iraq operates on a system where exchange rates are determined partly by market forces and partly by the country's central bank policies. The Central Bank of Iraq, much like central banks around the world, plays a pivotal role in managing the national currency and influencing exchange rates through interventions such as currency auctions, interest rate policies, and foreign exchange reserves. When the value of the US dollar rises against the Iraqi dinar, as it has in this case, it often means that there is an increased demand for dollars in the local market. This can happen for several reasons. One possibility is that local businesses or individuals may need more US dollars to purchase goods or services from abroad, as the dollar is the dominant currency in global trade. Another reason could be a perception of instability or uncertainty within the local economy, which drives people to hold foreign currency as a safer asset. In times of political or economic instability, citizens often convert their local currency into more stable foreign currencies like the US dollar, leading to an increase in the demand for dollars and, consequently, a higher exchange rate. Additionally, the rise in the exchange rate may also be attributed to regional or international factors. For instance, fluctuations in global oil prices can significantly impact Iraq's economy, given that the country is heavily dependent on oil exports. When oil prices fall, it can reduce the flow of foreign currency into the country, thereby increasing the demand for dollars and putting upward pressure on the exchange rate. Conversely, when oil prices are high, the influx of foreign currency can lead to a stabilization or even a decrease in the exchange rate of the dollar against the dinar. In Baghdad's exchange stores, the selling rate of the US dollar reached 151,000 dinars for every $100, while the buying rate was 149,000 dinars. This difference between the buying and selling rates, known as the bid-ask spread, is a common feature of currency exchange markets. The spread represents the profit margin for currency exchange dealers and reflects the cost of converting one currency into another. In this case, the spread suggests that there is a reasonable demand for US dollars in the local market, as exchange dealers are able to sell dollars at a higher rate than they are buying them for. Moving to Erbil, the capital of the Kurdistan region of Iraq, the exchange rates are slightly different but follow a similar pattern. The selling price for the US dollar in Erbil reached 149,100 dinars for every $100, and the buying price was 149,900 dinars. The slight differences in rates between Baghdad and Erbil could be due to regional variations in demand for foreign currency, differences in the supply of US dollars, or even logistical factors related to the transportation and availability of foreign currency in different parts of the country. Erbil, as a key economic hub in the Kurdistan region, has its own unique economic dynamics that can influence exchange rates. The region has a degree of political and economic autonomy from the central government in Baghdad, and this can lead to variations in exchange rates between the two regions. For example, Erbil's economy is more closely integrated with neighboring countries such as Turkey and Iran, and this can affect the flow of foreign currency into the region. Additionally, Erbil has a relatively higher level of foreign investment and international business activity compared to other parts of Iraq, which can influence the local demand for US dollars. It is also important to consider the broader implications of exchange rate fluctuations on Iraq's economy and its citizens. A higher exchange rate for the US dollar can have both positive and negative effects. On one hand, it can make imported goods more expensive, which can contribute to inflation and increase the cost of living for ordinary Iraqis. This is particularly important in a country like Iraq, where a significant portion of consumer goods are imported. On the other hand, a higher exchange rate can benefit certain sectors of the economy, such as exporters, who earn revenue in foreign currencies like the US dollar. If an Iraqi company exports goods to the United States or another country that uses the US dollar, a higher exchange rate means that the company will receive more dinars for every dollar it earns through exports. This can boost the profitability of export-oriented businesses and contribute to economic growth. However, the benefits to exporters must be weighed against the potential negative impact on consumers and businesses that rely on imported goods and services. Another important consideration is the role of government policy in managing exchange rate fluctuations. The Central Bank of Iraq may choose to intervene in the currency market if it believes that the exchange rate is moving too quickly or in a direction that could harm the economy. For instance, the central bank could sell some of its foreign exchange reserves to increase the supply of US dollars in the market and stabilize the exchange rate. Alternatively, it could raise interest rates to make holding dinars more attractive and reduce the demand for US dollars. In conclusion, the recent rise in the exchange rate of the US dollar against the Iraqi dinar in Baghdad and Erbil, as reported by the agency, is a reflection of a complex set of factors, both domestic and international. While the changes in the exchange rate may seem small, they can have significant implications for Iraq's economy and its citizens. Understanding these fluctuations requires a deeper examination of the factors that drive currency exchange rates, including economic policies, market dynamics, and regional differences. As Iraq continues to navigate its economic challenges, the exchange rate will remain a key indicator of the country's financial health and stability. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.